everybody, Adele Foltz here, your instructor for Accounting 1. And I wanted to walk through performing or preparing a set of financial statements from Chapter 1. Preparing financial statements is something that you're going to have to do throughout this course. That is what we produce and what we use to report to external users, the results of our operations and our financial position. So we will continue even after Chapter 1. We will continue to prepare financial statements, but here is where you are introduced to them for the first time. So the first financial statement that we always prepare is the income statement. And the income statement reports all revenues and expenses. So what I like to do is go through the accounts and the balances and mark whether items, what type of accounts they are. Are they assets and liabilities and equity accounts that go on our balance sheet, or are they revenue and expense items that go on our income statement, or are they dividends that go on our statement of retained earnings? So, so I'm going to go through here, and this will kind of be a little mini lecture and talk about what these are. So an asset is a resource that we own or control that has a future benefit. And so cash is definitely an asset. It has a future benefit, and we will be able to purchase property and equipment and hire people, buy supplies, etc. We have accounts receivable. That is also an asset. The future benefit of accounts receivable is that we will collect cash, and then we just talked about what we can use cash for. Our service revenue, that is a revenue item that we've earned. Our supplies are also an asset. We buy supplies for a period of time, and they have a future benefit, so they are an asset. Advertising expense is obviously an expense, and expenses are incurred in order to generate revenue. So we have to advertise in order to generate revenue, so that's an expense. Our equipment is an asset. It has a future benefit, actually probably 5 to 10 years worth of benefit. We'll use that equipment. Common stock is part of owner's equity. So I'm going to write owner's equity. And remember, the accounting equation is assets equals liabilities plus owner's equity. And when we get to our balance sheet, we will report all of our assets, all of our liabilities, and our owner's equity. So common stock will go on our balance sheet. Notes payable, it is a payable, which means we owe it. So that is a liability. Accounts payable is also a liability that we owe. Supplies expense are supplies that we use to generate the revenue. Maintenance and repairs expense is also an expense. Utilities expense, and salary and wages expense, all expenses. So if we are going to prepare an income statement first, which is what we do, we're going to report our revenues, and we're going to report and subtract our expenses in order to arrive at net income. Now, when we prepare our income statement, we always start with a heading that includes the company name. So this is Elite Service Company. We always tell the reader what it is that we are preparing. So in this case, we're telling the reader what you're looking at is an income statement where we're going to report revenue, expenses, and net income. By the way, if revenue exceeds expenses, we have net income. But if expenses are greater than our revenue, we have a net loss. All right, now we always include a date, and our income statement tells the story for a period of time. So we are going to select for the month ended, and that's given to us in the problem. We're told the business started on June 1st, and these are the revenue and expenses for the month of June. So this is for the month ended June 30th, 2022. Okay, so we are first going to tell the reader, okay, we're going to list our revenue. And we only had one revenue account here. We had service revenue. So we're going to tell the reader we have service revenue. And that's 7,500. So the first number in a column gets a dollar sign. So we want to put a dollar sign on that 7,500. If we had more revenue, we would continue to list the revenue and then total it. But we don't. We only have one revenue, service revenue, but we could certainly have, if we rented part of our facilities, we could have rent revenue or rental income. If we had money on deposit at the bank and earned interest, we would have interest revenue. So we often have more than one, but this company only had service revenue this month. So then we are going to next list our expenses. And I'm going to list them in order of magnitude, the largest expenses first. And I think that is our largest expense is here, salary and wages expense. And that was 1,400. Notice this was the first number in this column, so I also gave it a dollar sign. So we have our service revenue. Okay, and let's see, what is our next largest expense? It looks like our supplies expense. At 1,000. Then we have our maintenance and repairs expense at 600. And then we have advertising expense over here. And that was 400. And let's see, lastly, I think we have our utilities expense. Remember, these are all expenses that were incurred in order to generate revenue. So we're going to report them on our income statement and match them against the revenue. So if we total our expenses, they total 3,700. We're going to give that a label and tell the reader these are our total expenses. And then we're going to subtract those expenses from our revenue in order to determine net income. So if we take 7,500 and subtract 3,700, that means we had net income of 3,800. And we are going to give that a label as well. Every number gets a label, except for one that we'll talk about here shortly. Okay, so we have our net income and our income statement is complete. So let's go to our statement of retained earnings next. All right, I'm going to take this here and copy it. See if it will copy. No, I don't want to add image. I want to copy. All right, let's just use our Control-C. And we'll come down here and copy it down here. All right, there we go. And let's move it over. All right, so the next statement that we always complete is our statement of retained earnings. So our statement of retained earnings is going to be next. So our statement of retained earnings, remember that retained earnings is part of owner's equity. So if we have assets equals liabilities plus owner's equity includes our common stock. That makes owner's equity go up. our dividends, which make owner's equity go down, our revenue, which makes owner's equity go up, and our expense, which makes owner's equity go down. We've already reported revenue minus expense on our income statement, so that equals net income. But we don't always keep all of that net income. If we are profitable, our owners probably want us to return some of that net income to them, and so we will pay them a dividend. So we're going to combine our net income and we're going to subtract the dividends because that's what we're going to pay back to our owners, and that equals retained earnings. So our owner's equity will equal common stock and retained earnings. But what we have to do is show the change in retained earnings from the beginning of the year to the end of the year. That's going to be, we're going to start with our beginning retained earnings. We're going to add our net income. We're going to subtract our dividends, and that will equal our retained earnings at the end of the year. So our statement of retained earnings will show that to the reader. So we have, again, first thing we do is give it a title, Elite Service Company. We're going to tell the reader which financial statement they're looking at, and we're going to call that a statement of retained earnings. And the date for this is also for the month ended June 30th, 2022. So it's for the period ended, whatever period that is. It could be a month, it could be a quarter, it could be a year. But both our income statement and our statement of retained earnings are telling the story about what happened during a period of time. So it does matter which date you put on your financial statements. Okay, so our statement of retained earnings, we're going to start with retained earnings as of the beginning of the period. So we'll start with retained earnings, June 1st. And that amount is 0 in this case. Why? Because this is our first month in operations, and so we haven't had any earnings prior to June 1st. So our retained earnings is 0. This is probably the only time it's zero. Usually there is a beginning balance of retained earnings. And it could also be a negative number. If it's a negative number, that means that expenses have exceeded revenue since the beginning of time. And so we have a retained deficit instead of retained earnings. But in this case, we have retained earnings. All right. But we don't have any because it is the first time that we are reporting retained earnings. So it's 0. We're going to add our net income. And that's why we had to do the income statement first, because we get that number up here. Whoops. We get that number up here from our income statement. We're going to take that and bring it down to our statement of retained earnings. So our net income was $3,800. We're going to subtotal that. This is the only number that won't get a label. There will be no label over here. And then what we're going to say is, okay, so these are the total earnings that we could distribute out to our owners. And we've decided to declare, we come up here to our narrative, dividends of $1,400 were paid to the owners. So, you know, think of retained is synonymous with kept. So the company had available earnings to distribute of $3,800, but it didn't keep all of it. Instead, it paid back some to the owners. So we had dividends of 1,400. We're going to subtract those in order to come out with our retained earnings at the end of the period. That gets a double underline and a $sign. And so that's how much we've kept in the business. This went back to our stockholders, our owners. So we've told the story of what happened to retained earnings during the month. And so we have retained earnings, and this would be June 30th, 2022. So we're saying we started with none. We added 3,800 in net income. We gave 1,400 back to our owners. So we're left with 2,400 of retained earnings. That's how much we've kept. This will become next month for July. That will become the beginning balance. As I said, it will only be zero your first month of operations. After that, the ending balance from the prior month becomes the beginning balance of the next month. Okay? All right. So that is your statement of retained earnings. And your final financial statement that we're asked to do, we're only asked to do the income statement, retained earnings, and the balance sheet. We're not asked to do the statement of cash flows. You'll get to do that later on in this course. But now you just need to do your balance sheet. So the balance sheet is prepared after. Let's see if I can copy this. Oh no, I don't want to copy that whole thing. Let's see if I still have it here. Let's try and paste again. Ah, perfect. Okay, so now we need to do our balance sheet. And of course, if we were in class, I would ask you, I would ask you what comes first, and you would tell me, well, we need to have a heading. So this is Elite Service Company. And we need to tell the reader what they're looking at. So we're going to tell them we're going to report a balance sheet to you. And we're going to give them a date. The balance sheet date is not for a period of time. We're going to report the balances on one single day only. So we're going to tell them this is the balance of our accounts on June 30th, 2022. And remember, I've said twice now, this is what we're going to report in our balance sheet. Notice we have an equal sign here, so we're going to balance. Your balance sheet should balance. If it doesn't, you're not done. Go back and try and find your mistake. Okay, so we're going to list our assets first. Later on, we're going to finesse this a little bit, and we're going to separate our assets, I think in chapter 2, to different classifications of assets. But for now, in chapter 1, you're just learning it for the first time. So we're going to group all of our assets together. So we're going to tell the reader, okay, here are our assets. And we're going to list them. We're going to say we have cash. We said that was an asset of 4,600. Notice my first number got a $sign. We have accounts receivable of 4,000. And I don't think they asked us to order them in the order of liquidity, but that's what we usually do. Liquidity means how fast they're turned into cash or used in operations. So cash is already cash, so we always list it first. Accounts receivable will turn into cash, we hope, in 30 days, so we list that next. Supplies, we usually buy only a month or two of supplies and have those on hand. So we have supplies of 2,400. All right, so we've taken care of our cash, our accounts receivable, our supplies. Equipment is an asset. And in fact, that's we're going to use that over the next 5 to 10 years or so. So we're going to list that last, 26,000. And those are all of our assets, right? So we're going to total them, and they equal 37,000. And we're going to give it a label, total assets. Okay, that's going to be a grand total, and that equals 37,000. So I'm going to give it a $sign and a double underline. So we know our assets are 37,000. When we're done over here, our liabilities and our owner's equity that are also equal 37,000. Now I'm going to complete this over here in this space, but it's okay if you complete your liability and owner's equity section below your assets. You could do it down here in this space instead. But I'm going to do it to the right so we can see everything all together on the screen. So we're going to tell the reader, okay, now we're going to report our liabilities and our stockholders' equity, which is the same as owner's equity. Your owners are your stockholders. And so first we're going to list our liabilities. And we've identified them above. We had two of them. We had notes payable and accounts payable. So let's list notes payable. That was 12,000. Again, first number in the column got a $sign. We have accounts payable. That was our other liability. We only had these two. We could always have more, but this is all this company has. And remember, we talked about, or if you're in an online class, we didn't talk about it, but you read in your textbook that accounts payable is a liability that's created when we buy goods or services and we don't pay for it at the time that we buy it. And we are going to pay for it 30 to 45 days later. Okay, so we're going to total these two numbers. That equals 12,500. That is the first number in this column, so I'm going to give it a $sign, and I'm also going to give it a label. Every number has to have a label except for that one number on the statement of retained earnings. So, so this is our total liabilities. And next, we're going to tell the reader what our total equity is. So we're going to tell them we have stockholders' equity. And we are going to first list our common stock. And our common stock is up here. Ah, there it is, 22,100. This is not the first number in that column, so I'm not going to give it a $sign. And then we have retained earnings. And our retained earnings was up here on our statement of retained earnings. So once again, we're going to take this number and take it down to our balance sheet. So we bring that down. And our total stockholders' equity is now 24,500. And remember, every number has to have a label. So I'm not sure I'm crazy about how the book showed this. I'm gonna, they moved it up on this line and didn't give it a label, but I'm gonna give it a label. Total stockholders' equity. I'll show it the other way too, in case that's the way you have to do it in Wiley Plus. Total stockholders' equity, and then we're going to add these two together, and that equals 37,000. We already knew what we were expecting, so we would just add and make sure that they equal 37,000. That is a total, so it gets a $sign and double underline, and this gets a label, which is total liabilities and stockholders' equity. Okay, so we've completed all three financial statements, all starting from the activity and the reports about what happened during the month. Then we are reporting an income statement, which reports our net income. Our revenue minus our expenses equals net income. We take net income and we add it to beginning retained earnings. We subtract our dividends and we come to ending retained earnings in our statement of retained earnings. And then we use that number and bring it down here to our balance sheet. Now, let me just point out one other thing here. Let's just go back to our accounting equation. Obviously, we've reported all of our assets, we've reported all of our liabilities, and we've reported our owner's equity. And we stayed in balance. Now, let me just point this out because it's very, very useful. And certainly the way that I teach accounting is that I always say owner's equity is made up of four things: common stock, dividends, revenue, and expense. Common stock makes owner's equity go up. That's when an owner invests in the company and gets stock in return. So common stock goes up when our owners invest money in the company. When we provide money or send money back to them in a dividend, it makes owner's equity go down. Revenue, when we earn revenue, when we provide our services and earn revenue, owner's equity goes up. And when we incur expenses, owner's equity goes down. So all of these individual items are not on our balance sheet, right? We had reported our common stock, and then these three items are reported on other statements. Revenue minus expenses is in that's net income, and it's reported on our income statement. And then we combined it with our dividends, and that was reported on our retained earnings statement. So the only thing that went on our balance sheet was common stock and retained earnings. And we would tell a reader, well, if you want to know how we arrived at retained earnings, you should go look at the income statement and then go look at the statement of retained earnings, and then you'll figure out how we got to retained earnings of $2,400. Okay, so that concludes your video on preparing financial statements. You're going to find this useful not only for Chapter 1, but also for Chapter 2. We'll finesse it a little bit in Chapter 2, but you will be doing it all semester long. So now's a great time to solidify your understanding of financial statements, how to prepare them, and how to put them together. Remember, income statement comes first, reporting revenues and expenses. Next comes your statement of retained earnings, which takes our beginning retained earnings, adds our net income, subtracts our dividends in order to come to ending retained earnings, which then goes down to our balance sheet. And our balance sheet reports our accounting equation: assets equals liabilities plus owner's equity. So that concludes your video, and I really appreciate you watching.